What's up everyone? In my last video I told you what the 3 keys to creating a financial plan were, and in this video I'm going to show you how to turn the first one so that you too can begin your financial journey today. To do this, we are going to use 2 budgeting tools that I created that make it as easy as 1, 2, 3. Well, sorta. It's as easy as smashing that like button for the YouTube algorithm and following 5 simple steps. Now before we get started, I included a link below where you can download these budgeting tools for free. So if you're ready to level up, pause the video, download the tools, and get ready to follow along. Alright, now that you're properly equipped for the journey, let's go ahead and get started. Alright everyone, so what we have in front of us is the finance tracker sheet that I was talking about. So in this one we're going to track all of our finances, and I'm going to show you how to do that with the 5 easy steps. So step 1 is to fill in the income. So this is just going to be your paycheck. So the amount on your paycheck and the date, and these are important for budgeting, so make sure that you have the date here because we're going to match that up with the expenses in the other sections. Step 2 is your static expenses. So here in this section, what you're going to be filling out are things that are coming out of your paycheck every single month. So there are things like TV subscriptions, they are also things like your payments for your auto loans or your credit cards, your utilities every month, your rent or mortgage. They're all things that are going to be charges that are pretty much the same price every single month and only are going to vary a little bit. Your utilities vary depending on how you use them, but they are part of your static charges. Step 3 is going to be your lifestyle expenses. So what you're going to do with this is you're going to come over here to the monthly spendings tracker, and you're going to fill in all of these categories with what they are in your bank account. So again, the date and the amount, and let's say that you don't have pet care expenses or you don't have healthcare expenses, you can change these categories to other things that apply to your expenses that you have for your lifestyle. So you're going to fill this out with the information from your bank account, again, making sure that you have the date and the amount, and the date's important, again, for calculating your budget out so that we can determine which paycheck that it's coming out of. In step 4, after you've determined how much that you're actually spending, whether it was the previous month or you're trying to do it for this month, and you're filling in your categories, what you're going to do next in step 4 is you're actually going to create the budget for what you want. So if you did your previous month's expenses, then you're going to put in your current month what you want your budget to be. So let's say that you spent $600 and you want to instead spend only like $400, you're going to put that in here, and it's going to reflect on here what the difference between those are. And as part of step 3, what you're going to do also is you're going to fill in your categories and your expenses in this section over here so that you can see what you spent on this paycheck, on the first paycheck versus the second paycheck. And then you're going to be able to see what the difference between these two and how much you spent on one versus the other is. And then what you're also going to do down here is you're going to be able to fill in your static expenses on one paycheck versus the other paycheck, and then see what your total is by the end of it. And then down here, you're going to be able to input all of your categories and what they're like, subscription or payment or utilities, all the ones that you have here, so that then you can break those down and see how much you're spending in each. And then you're going to combine it with the total mortgage and rent amount, and that's going to give you how much your total static expenses are. So that is step 1 through 4. And then the very last step, what we're going to do is we're going to take what you have in funds available and subtract it from what you set your budget as. That's going to be your financial buffer. So to see how this is done, I'm going to show you an example of what it looks like when you fill it out. So right here, what I have is an income type that you might see for some people. So like, let's say that they get paid on the 1st and the 15th. So sometimes their bank account might process it a little earlier, so that I put this on the 30th of December instead of the 1st of January, and the 14th saying that they got paid like a day earlier. So this is calculating your total here for step 1. And what you can actually see over here in your financial summary is that it automatically entered it in for your first step. All right, and then this in step 2, you're going to fill out your static expenses. So here I have some examples of expenses that you're going to see, whether it's a subscription, a payment, and I have notes about where those things are coming from, so you can kind of see on here an example of what you're going to have when you fill out your own. And then as part of that step in here, you can see that I went ahead and I used some, and then I took all the ones that said subscription, all of the payment brackets that were next to it, and added them together to give me a total of what I'm paying in subscriptions. I did the same thing in utilities, I did the same thing in insurance and payment, and that gave me a total expense, and that gave me the total expenses with just those involved of $1,773.32. And then I added in a monthly mortgage rent of kind of a higher end home that you might have, and that wound up being $3,711.64. So in this section for our expense projection, we can see that during the first half of the month, there's $492.91 that come out of our paycheck, and then we subtract this from our income that we get for that paycheck, and it shows that what we got, and it shows that what we had as a remainder was $2,089.74. And then in the second half, we can see that this is where the brunt of all of our expenses are coming from. They're in the second paycheck versus the first paycheck. So we know that we're going to have at least $640.92 from the first paycheck to be able to cover all of our expenses. So with just our expenses alone, we have a remainder here of $1,448.82. So that number right there is what you have to budget every single month for your lifestyle expenses. So I already set this up so you're able to see how it all kind of comes together. So in step 1, your income, it's right here. Step 2, your expenses, which is right here. And then step 3 with your budget. So I have it put right here so that you can see it when you're setting up your budget, and also having how much you had spent in the previous month, so that you can see, like for example, in this month I spent $1,584.33. And because of it, my projection for my income was that I would go over by $107.70. So if I want to make sure not to go over but have a financial buffer, this means that I need to come over here to the month that I want to set a budget in and say I want to spend less on groceries, so maybe like $600 there. Transportation costs are kind of tricky because it just depends on how much you're driving, but let's say that I want to spend about the same amount, so about $230. And eating out, let's say I want to eat less, but I still want to be able to go out and enjoy some food, so maybe I'll set it at 100 instead. And for entertainment, I'll keep it at about 100. Healthcare costs kind of come and go, so you can't really predict if one month you're going to have the cold or the other month you're not. So you could just say maybe like $30 just in case. And then for shopping, maybe you want to spend about the same. Pet care, not there. Miscellaneous, you can never really tell what's going to come out there. But already in just kind of playing with the numbers here, you can see that you have saved yourself about $374 roughly that you now have as a financial buffer versus what you had before. So in order to see what your financial buffer is, what you would do is you would take this number here for your funds available, and you would subtract this from your funds available, and this is going to give you what your buffer is. So just to kind of show that what that would be, let's just go ahead and create like a section right here just so that we can see it. You would take the sum of your budget that you have, and you would subtract that budget from the funds that you have available, and that's going to give you your buffer. So in this case, you would have $266.33 by the end of the month. That would be a buffer for if there were any additional expenses, or if you want to use this to help you either pay your debt down or start building a savings for yourself. Now, I'm not saying that you would have $600 in groceries. Maybe you might have $400. And if you wound up doing that, then suddenly your buffer is now $466.33. So what you can do, and what this will allow you to do, is be able to evaluate the expenses that you have and say, okay, this is what I want to spend on it, and by spending this much, I now have this buffer that I can use to build up either my own savings or to kind of weather against any unforeseen financial situations, or I can even use it to pay down my debt as like an additional payment. So this is really useful in just going through those 5 steps: the income, the static expenses, your lifestyle expenses, setting a budget, and then establishing what your buffer is. And by doing this, you won't have to worry about going in the red every month, but rather you'll have yourself a nice little financial cushion that you can use each month in order to keep yourself from going over. And the nice thing about these lifestyle expenses, not everybody's going to pay $400 in groceries, but let's say that, for instance, you have unexpected expenses that come out here and you don't wind up shopping as much. You can move this money around in order to fit whatever you're going to need, whether you're going to need more groceries and you do less shopping, or you're going to not need any health care and you can add it to one of these categories. This is a very flexible system that you can use in order to just kind of balance out your lifestyle each month while also not going into the red and having a nice cushion by the end as well. All right, and then as an example for your spendings tracker, here's what I did for this one. So I split it between the first paycheck and the second paycheck with a red line so that you can see what the difference is between the two. And you can use this in order to enter it in on this area over here on your first paycheck versus your second paycheck. So it makes it really nice because you can not only see how much you're spending in total every month, and this is where I got all my totals from, but you can also use it to be able to see where all your lifestyle expenses are coming from in addition to your static expenses. So it makes it so that you know where all of your money is coming from and where all of it is going. So this tracking sheet makes it so that everything is visible to you. Every single dollar can be accounted for, and you can see where all your money is going, and then you can also give it direction for what goals that you might have. All right, so let's go back, and then I'm going to show you guys some methods that you can use in order to actually accomplish this. Now, some of you may wonder, okay, I've set my budget, I know what my financial buffer is, so how do I go about actually making this plan work? Here's the key. You're going to want to separate your static expenses from your lifestyle expenses. In many businesses, they have different pools of money that are budgeted out for their different categories. They do this in order to make sure they aren't spending, say, their marketing money on their advertising, or they aren't paying their advertising money with the money that should be used for their employees instead. To be successful, you're going to want to do the same thing with your own money. And here are 4 examples of how you can do just that. The first one is cash envelopes. Cash envelopes are laminated envelopes that allow you to label how much money that you want to spend and in which category it goes. This allows you to break it down into things like gas, or groceries, or eating out, or shopping. And it makes it so that you can literally separate out the money that you're using for your lifestyle expenses versus your static expenses, which would stay in your account. Speaking of accounts, that's actually the next one. Creating a checking account specifically for your lifestyle expenses allows you to keep one account that's just for your monthly static expenses, while the other one is only for the money that you use for lifestyle expenses. This method allows you to separate them literally, so by the end of the month, even if you spend all of your lifestyle expenses, you still have your static expenses that are taken care of with the money that you forecast for that month. With the next method, what you would do is keep everything in the same account, but use the spreadsheet that I just gave you and track everything that you're spending for your lifestyle expenses so that you know exactly how much money that you have left and don't have to worry about your static expenses because they're already accounted for in the account that you're using. This might be a method that's easier for those of you who are more able to keep yourselves accountable through a simple spreadsheet. Now, for those of you who like apps, what I would recommend is using Mint. Mint is an app that lets you connect to your bank accounts, and it shows you how much money that you're spending on each category. Not only that, it allows you to set a monthly budget that you want to use for each, and then notifies you when you're going over that budget. This app is also useful because it connects to your Social Security account if you allow it, which gives you the ability to see what debts are being counted against your social, and thus knowing how much debt you actually have, versus trying to reach out to collection companies or other companies to try and figure out how much debt you actually owe. Know of some other methods that you can use for keeping track of your budget? Go ahead and leave it in the comments below, so we can learn of even more methods that you can use for tracking your money. So in review, the 5 steps to turning the first key are: fill in your income, fill in your static expenses, fill in your lifestyle expenses, subtract your lifestyle and static expenses from your income, and create a budget. Subtract your created budget from the funds available that you have left over after you set your budget, and then establish your buffer. Now that you have learned how to set a budget and create your financial buffer, you'll be able to confidently smash that like button and level up your finances today. If you found value in this video, then hit that red subscribe button and turn on the notifications for more amazing content. Comment down below with any questions that you might have and I will address them in future videos. Thanks everyone, and as always, share what you have learned with others and build a brighter financial future today.